He had a dispute with one of his colleagues called William Eckhardt. William Eckhardt, he's a professor in mathematics, brilliant trader, brilliant mind. And they had this bet. Trading? No, you're born a trader. You can't teach trading. No, you're born a trader, you're not a trader. And I don't know which one of them said, no, it can be taught. They said, right, let's bet. Let's find out. Let's hire some traders and settle this bet once and for all. We are going to get some people in. We're going to train them in our money management and our entry techniques. And the techniques they had, they were very complicated, extremely complicated. That's sarcasm, by the way. Their entry technique was, if the market trades at its highest for the last 20 days, then that's your buy signal. I.e., if the market sits at its highest for the last 20 days, buy. And if the market sits at its lowest for the last 20 days, sell short. So they got the 10 people in, and I happened to get to know one of them. Russell was a world-class backgammon player, and that's why he got hired. Richard and William Eckhardt, they thought, well, guys like that, they will know statistics, they'll know odds. And I happened to get to know Russell when he was in London. And he said, do you know what the worst thing about being a turtle trader was? It was that you were not allowed to take your profit. You could be long soybeans or wheat, and it would be climbing, climbing, and climbing, and climbing. And you would be making $1 million, $2 million, $10 million, $20 million, $30 million, but you were not allowed to guess where the top was. And it was unbearable. You sat there, and that money was burning a hole in your pocket. You were just not allowed, because what Richard Dennis advocated was that out of 100 trades you execute, 97 of them are going to be, nah, but 3 of them are going to be ka-ching. And you never know which one of the hundreds it is. So you just had to sit on your hands. And I swear to you, he says, the hardest thing in the world is to sit on your hands and just let the market do what the market does. And in the end, he bowed out. He just couldn't hack that way of trading anymore. Now, would you agree with me that there was nothing on paper, there was nothing difficult about the entry system. There was nothing difficult about adding to the winning positions. They had a mathematical formula. It's efficient. It's just very difficult to do nothing in the face of a winning position. Or you want to tinker a little bit with it, or maybe take a little bit of profit. But leaving a winning position alone, that's why trading is difficult. It's not difficult to understand Fibonacci and stochastics and all these things. No, fighting our natural urges is what makes trading difficult.